Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories Monday afternoon. Stocks pick up pace with key indices now near the day's high. Banks are relative underperformers. Realty, utilities lead gains, while financials and FMCG drift lower.
Strong bookings and collections in Q4 drive up Godrej Properties and Sobha. Other realty stocks too gain as fears of high interest rates recede after RBI's pause.
Credit Access Grameen surges in trade after upbeat Q4 numbers, a robust growth in disbursement and customer additions, but the stock has slipped from the day's high.
City gas distributors lower prices after the cabinet accepts most recommendations of the Kirit Park panel on gas pricing. The policy bodes well for players like GAIL, Indraprasth Gas and Mahanagar Gas.
Neogen Chemicals surges as sources tell CNBC-TV18 that the company is likely to announce a technology partnership with a global major company to confirm the strategic announcement today.
Okay, all right. Those are the top headlines that we are tracking for you on Midcap Radar. As far as the markets are concerned, slightly off the highs of the day, but still sitting with gains. That is, the Nifty is up 60 points right now. We also have the Sensex high by 162 points. So that's a 0.3% gain on the Sensex. Midcap side of things, they're actually outperforming the benchmark. So the Midcap index is up 120 points with advance decline ratio in favor of the advances right now. The only fly in the ointment today is the Bank Nifty, which is an underperformer sitting with cuts of 60 points. And if we look at what's moving around in the broader markets, it's really the realty names. Nifty Realty up 4% right now, led by good updates coming in from some of these names like Godrej Properties, Sobha, and also the fear of any further, at least for now, any rate hike has been done away with. So there was no rate hike on Thursday, and that is something that has propelled all these stocks higher. So Nifty Realty up around 6% in last two trading sessions itself. Important to watch out will be some more commentary. We have the earnings season starting again, and you will be taking it forward, Reema, with all the IT updates we're expecting.
Yes, so TCS is Wednesday post-market as, Thursday is Infosys post-market as, and then of course on Saturday you've got HDFC Bank. So these would be the top three earnings to watch this week. But even globally, you've got JP Morgan and Citigroup reporting their numbers. So full tilt on earnings starting from in the next 2 days. But let's talk about the market technicals. Rahul Sharma of Equity 99 Advisors is now joining in on the show. Rahul, afternoon markets are quietly, slowly creeping higher and higher, and now the Nifty's conquered 17,650. Does that open up more space on the way up?
Good afternoon, Reema and Sonal, both of you, and to our viewers. See, definitely, and the week which we have seen like last short week, but definitely a positive one for the market. And at the current levels, I think this slowdown, or you can say the consolidation, is looking good to me. But see, with Bank Nifty particularly, 41,000 is an important level, which we have to see on the closing basis. Because 41,000, if it is breached on the downside, it may slip down in coming week. But the setup suggests that it is limited on the downside. This good supports are present at 40,650 levels, and on the immediate basis, if we see 40,880, looks like a good support for Bank Nifty. And for the Nifty, particularly on the upside resistance, I think 17,770 and 17,900 are the levels which may act as a hurdle for Nifty. And on the downside, I think 17,575 and 17,500 should act as a good support overall for Nifty and Bank Nifty.
Okay, all right. That's about the support and the levels to watch out for as far as the benchmarks are concerned. What about individual stocks?
See, Sonal, a few stocks are giving us a good technical breakouts. First selection is Redington India, which is trading near 176 levels. See, the chart structure is very wonderful. In recent market correction, stock has made strong base near 160 zone, near to its 200 EMA. And since then, it has been making good move. And now on daily charts, we can see a formation of inverse head and shoulder pattern with a breakout. So the target for Redington India is set at 190 with a strict stop loss at 170 levels. And second selection is REC Limited. See, this finance company, which is trading near 123, 124 zone, looks very bullish. The recommendation is for short-term positional trade. The technical setup is very strong. After a long jump, stock has been consolidating between 10 rupees zone. Now it's near to its horizontal line breakout, which can lead this stock to around 130 and 135 levels. So the target for REC Limited will be 135 to buy at current levels with stop loss of 116.
Thank you very much, Rahul, for joining in. Let's talk about the mid-caps outperforming today. The advanced decline ratio holding up in favor of the gaining side. We've got nearly 1,700 stocks trading with gains versus 1,250 trading with losses. This is Midcap Movers. Vivek is here with that list. Vivek.
Well, thank you so much for that. Another day where you're actually seeing quite a lot of green as far as the broader end of the market is concerned. First on our list today, Neogen Chem, on the back of the anticipated news flow, and our exclusive stock up almost 6% in the session. Today, you're actually seeing chemical as well as, the mid-cap pharma stocks doing very well in the session. Chemplast Samar, another name, up almost 8% in today's trading session. Aarti Drugs up 6%. Now, Unichem lags. This particular stock has moved up almost 20 to 25% in the last 3 to 4 trading sessions. We'll watch out for any development in terms of corporate action in this particular name. Now, moving on, some of the other names that are doing quite well, names like SMS Pharma up almost 6% in the session, Aarti Pharma as well as Rosari Biotech. All of these stocks are up, in today's trading session from the chemical as well as the pharma pack. Now, some of the stocks that are doing very well compared to their 5-day, 10-day average in terms of volume action, look at names like Nagarjuna Fertilizers, Parag Milk, also Saxoft up almost 5% in the session. On the other hand, some of the stocks that are losing in today's trading session, seeing a bit of profit booking, DB Realty, Ruby Bills, after a while this particular stock is moving down on strong volumes, and Som Distillery, despite some news flow coming in here, the stock is down almost 5% on profit booking.
Okay, all right, Vivek, thank you so much for joining us with all those mid-caps that are moving around in trade today. The mid-cap index is outperforming with gains of 120 points right now. We'll do one thing, slip into a short break and get you more on markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, while the benchmarks are doing well, a couple of these stocks in the Nifty pack should come up for you. The auto pack actually has been doing well. Tata Motors, of course, on the back of this good update which came in from the global markets or the international markets. That one is up 5%. But apart from that, some of these names like Eicher Motors, which is at the day's high, that stock is higher by 0.8%. We have Maruti Suzuki as well, which has recovered from the lows and is at the day's high right now. Remember, there has a downgrade which has come in, but at the same time, of course, this cut in CNG prices is something which could benefit Maruti because it has a higher exposure to the CNG segment as well. We also have ONGC, which is at the day's high right now. While the gas price cut is a negative for them, but in the longer run, it's a positive because now there's a floor to the gas pricing. And also, it puts in force a definite regime as to how to calculate these gas prices on a monthly basis. The CPSE basket is doing well today. So something like a Power Grid is higher in trade today as well, 1.5% higher there. Again, from the auto pack, we have Hero MotoCorp, which is higher. So yeah, these names from the Nifty pack are doing well right now. But of course, we'll focus on mid-caps as well because this is our mid-cap spotlight segment. Manglam Malu is joining us and he's going to be talking about Ethos on the back of its Q4 operational update. Manglam, how did it look?
Well, it looked very good, and would you believe it? If you bought a Rolex watch 6 years ago, the returns that you would get on that watch would be higher than any other asset class in the last 6 years. And that's perhaps what is aiding the growth in luxury watch segments as well. You guys have been talking about luxury houses and jewelry, etc. And Ethos has shown a revenue growth of almost 31% in the fourth quarter. 242 crores is what the company has done. For the entire year, their gross billing revenue has grown to about 36.6%, and this compares to the company's guided band of 35% itself. They've also ventured into new cities. Again, talking about the trend of growth in India coming beyond metros, and the two cities where they've opened luxury watch showrooms in are Bhopal and Siliguri. In fact, during the quarter itself, they opened 4 new stores, total number of stores at 54 now. So with all these things happening, the important thing to track for Ethos going forward, especially given the 41% rise that we've seen in the stock price since its listing, is one, the rate at which they add their stores. Secondly, the increase in realizations. The average selling price of their watches have continuously increased, whether that sustains or not. And thirdly, most importantly, they've positioned themselves as an ultra luxury watch seller, and also looking at new categories like jewelry and luggage as well as women's handbags. So with all those things coming by, How much could that aid their revenue is something we'll be watching out for.
Okay, that'll be interesting. Rima, are you a person who's contributed to these sales for Ether? No. Okay, jokes apart, of course, Ethos is in focus on the back of that. But moving on, sources are telling CNBC-TV18 that Neogen Chemicals is likely to announce a technology partnership with a global green energy company. Vivek is joining us with more details on this one. Vivek?
Well, absolutely. So Neogen Chemicals, is in focus today. Stock is moving higher. This on the back of a likely announcement that we understand from our sources that the company is going to make today. This is a technology partnership, like you mentioned, with a global major. And the company, along with this, is also going to go ahead and most likely detail steps as to how exactly they are going to go about in the electrolyte manufacturing in the lithium-ion battery making process. And the company wants to make its entry into the EV space in this particular manner. We also understand that the company most likely is going to be the supplier under the PLI scheme, for most of the domestic battery majors, and this is something that the street is eagerly anticipating. Along with that, the company has also gone ahead and called for a press conference to announce and make a strategic announcement today. Remember, just some time back, towards the end of FY23, the company announced a formation of a subsidiary known as Neogen Ionics, and the main purpose of this particular subsidiary is to go ahead and look at opportunities in the energy space, such as lithium-ion batteries. We reached out to the management. They've asked us to hold on till the official press announcement is made. So we'll wait and watch out for this particular name.
Oh yes, we will. The stock is high by 6%, and they have been into the lithium-ion segment for a long time, and they have been talking about how they want to expand this into the space now that more regulatory or at least more permissions are in, and the lithium pricing environment is also getting better for the company. So we'll track that for you, of course, and get you more details. But of course, Q4 earnings season is here, and it kickstarts this week with TCS reporting its numbers on 12th and Infosys on 13th. Rima has gone ahead to that big war with the key expectations. Rima.
Thanks so much for that. So this is going to be one of the trickiest quarters to lay out expectations, considering that we are in a heightened period of uncertainty. Just look at the broad divergence in expectations. So for instance, for TCS, the range of the constant currency quarter-on-quarter revenue growth ranges from 0.1 to 1.7%. For Infosys, it goes from minus 0.1 to 1.1%. But look at the numbers for HCL Tech. Now, CLSA is expecting a degrowth of 2.9%, but Nomura is expecting a growth of 1.1%. So the expectations are all over the place. But as you can broadly see, the growth this quarter is going to be lower than the prior quarter. Q4 less than Q3. And the key reason for that is the banking crisis in the US regional banks and the European banks may have induced greater caution, impacting the overall tech spends by banking clients, and plus typically March is a seasonally weak quarter. Now, the margin performance amongst large cap is also likely to be more divergent. Now, for TCS, we're anticipating about a 50 basis points margin expansion, but for HCL Tech, margins could come down on a quarter-on-quarter basis. The key is going to be the FY24 guidance, and here we're anticipating Infi to be conservative and guide for a 6 to 8% revenue growth, constant currency revenue growth. But this will be lower than the 16% odd that they clocked in last year. That's FY23. But Infi is Infi, so we're expecting them to be fairly conservative. For HCL Tech, again, it's very hard to get a consensus this time on guidance, but it looks like it could be a mid to high single-digit kind of growth because you've got a minimum of 4 to 6%, and you've got some analysts even going up to about a 10% growth. But both HCL Tech and Infosys are likely to range the upper end of their margin guidance. These are the numbers. For Infosys, 21 to 23% versus this year's margins at 21 to 22%. So the upper end of the margin guidance is likely to be raised. Now let's quickly run you through some of the brief and quick expectations of what we are going to be watching out for. 1, the extent of impact due to the global banking turmoil on deal wins. 2, retail, high-tech, Europe. These were flagged off as some of the weak pockets in the prior quarters. Does the weakness continue this time? Will normalcy return in the second half of FY24? Because what analysts are penciling in is that H1 is going to be weak, but things pick up in the second half of the year. Company-specific TCS is eligible to announce a buyback. It's eligible, but will it do so? Leadership changes have been announced right at the top for TCS and Tech Mahindra, so they will take center stage. And any change in priorities, strategic direction, new appointments as well, right, under them. Now, TCS has to announce a new BFSI head, the COO, Chief chief operating officer will be resigning or retiring next year? And finally, on deal wins, are we seeing a delay in deal ramp-ups? Are sales cycles getting longer? Is there slower revenue conversion? So all these are some factors that we will be watching out for. And finally, considering that the IT stocks have seen a bit of a correction, the valuations now are pretty much what they were compared to their 5-year average. So are they pricing in the uncertainty, the uncertain environment that we're currently living in? Back to you.
Okay, all right. The action starts from Wednesday. Thank you, Rima, so much for joining us and telling us what to expect from the IT space this quarter. With that, we'll slip into a short break. Up next, Ekta will join us and we'll put some focus on the largest deal in the healthcare space. Stay tuned for more details on that one.
Welcome back. The gains are not much from a market point of view. The indices are up close to about 0.3%, but this has been a steady and a positive session. And that one dip that we had some time back has been firmly bought into. The dip took place somewhere around 10:45 to 11 a.m. and that's been bought into, and the markets have risen. In the last 10 minutes, we've seen some of the gains being shaved off, but largely this has been a positive session for our markets. But let's address another big story. Singapore government-owned fund Temasek Holdings has acquired a majority stake in India's leading hospital chain, Manipal Hospitals. Ekta is here. She's standing by to decode this deal and how hospital companies' valuations have zoomed in the last 5 years.
Thanks for that. Well, in what is one of the largest deals which have taken place in a pan-India hospital company, Singapore-based PE fund Temasek is buying controlling stake in India's second largest hospital chain, Manipal Hospitals, for over $2 billion. Temasek already owns 18% stake in the hospital and will be buying an additional 41% from promoters and others for around 16,400 crores. Manipal, with a bed count of around 8,300 and 29 hospitals in 16 cities, is India's second largest pan-India player after Apollo Hospitals. The company, which is looking to ramp up its bed count around 10,500 in 2 years, has seen revenues more than double to around 4,000 crores and margins expand to around 24% in FY22, valuing the deal at around 10 times FY22 sales. Now, talking about valuations, in the past 5 years, valuations have risen as much as 8x in the hospital space. 2018, for example, saw two pan-Indian hospital companies sell stake, Fortis and Max Health. Fortis, interestingly, which was once bid for by Manipal and sold to IHH, another non-Indian promoter, for a valuation of around 13,000 crores, currently has a market cap which is almost 50% higher. In the same year, KKR picked up majority stake in Max Health for a valuation of just around 4,265 crores. The current market cap is over 42,000 crores. KKR also exited Max with a 5x gain last year. Valuations for Indian hospitals, experts say, really pivoted during COVID-19, which benefited, for example, from better improved long-term structural drivers such as better medical awareness, insurance penetration post the pandemic, and medical tourism reverting back to normal. And Manipal's valuations have just about almost doubled in the past 2 years. Is a good indication of this interest. In 2021, National Investment Infra Fund, or NIIF, invested around 2,100 crores for around 8 to 9% stake in the company, valuing it at around 25 to 26,000 crores, which has now almost doubled to around 40,000 odd crores. And this is reflected in hospital stocks too, which have risen anywhere between 25 to even close to 100% since the start of FY22. However, while hospital stocks have risen and valuations have expanded, based on the 10 times FY22 market cap to sales valuation ascribed to the Manipal Temasek deal, a quick comparative check indicates there might just be room for further up move for a few of the current listed hospitals. Lastly, this deal also points to a trend of PE funds doing control deals in the Indian healthcare space. Besides KKR Max, the other recent examples include the Ontario Teachers, Sterling Hospitals Upward PE, and the Samara Marengo platform as well.
Okay, all right. Interesting deals taking place in the hospital space. Thank you so much, Ekta, for explaining what's happening there. As far as the markets are concerned, there's some fall from the highs. The Nifty Bank is the one which is putting some pressure. So Nifty right now is up 43 points, and the Nifty Bank is seeing cuts of around 132 points. If we talk about what's happening in the broader markets, a lot of these real estate names are really doing well. So DLF is high by 6%. We also have Ajmera Realty, Sobha, Godrej Properties. We've been highlighting that. Apart from that, PFC and REC are two stocks that should be on your radar, both high by 4 to 5% in trade as we speak. We also have AB Fashion and Retail high by 2.5%. So mid-cap side of things, they continue to do well as mid-cap index is up 135 points. We'll see whether that continues or not and that sustains at current levels or not. With that, we'll take your leave on this edition of Mid-Cap Radar. Stay tuned, Inside Out when we return.